Hi everyone! Today's video is a bit different, and it's actually part 1 of 2, so it's easier to digest. We are heading to China, but not to the obvious AI spenders you hear about all the time, Alibaba, Tencent, Baidu, or Huawei. The goal here is to lean on the picks and shovels strategy, meaning rather than invest in the gold miners, we invest in the people selling the tools and building the essential infrastructure. So we'll focus on small and mid caps that could benefit as those giant RAM data centers and model training CAPEX. In this first episode, I'll cover 4 companies I found interesting. In the next video, I'll look at a few more. Quick note before we start. None of this is financial advice, and keep in mind we are talking about high volatility and extremely rich valuations. Taclink makes the optical plumbing that moves data with light inside and between data centers. Their 2 key blocks are EDFAs, optical signal boosters, which restore a weakening light signal so it can travel farther, and WDM, many light wavelengths in one fiber, which packs many colors of light into a single fiber, like adding extra lanes on the same road. These modules sit between the switches, routers, and the fiber, so you can push more data per fiber and keep long links clean with fewer errors. Why it matters for AI? Large AI clusters create heavy east-west traffic and side-to-side sync called DCI, Data Center Interconnect. You can't pull new fibers forever. WDM adds lanes on one fiber, and EDFAs keep those lanes strong over distance, which preserves high throughput and keeps training jobs stable. Business. Customers demand qualification, months of reliability and performance testing before volume orders. Once you're qualified, revenue tends to be sticky, often via combined EDFA plus WDM bundles. The trade-offs are lumpy orders and price pressure from large OEMs. Numbers. Revenue rose from 665 million yuan in 2020 to 841 million yuan in 2024, about 6% per year. Net profit moved from roughly 142 million yuan to 100 million yuan, but was up 9% year over year in 2024. For the latest full year, revenue was 841 million yuan, plus 2.8% year on year, and net profit 100 million yuan, plus 9.1% year on year. Valuation sits around approximately 203x PE on a TTM basis, which basically says the market is paying up for future AI DCI orders. Why look now? China is shifting from add GPUs to connect GPUs, so optical transport and DCI should benefit. Watch for big data center qualifications, EDFA plus WDM bundle wins, and any export traction. Presence at CIOE is a useful near-term signal. M&A. Odds look high. An EDFA plus WDM niche is a classic bolt-on for a bigger player looking to round out its transport stack. Montage Technology builds 2 families of keep-it-stable silicon for data centers. First, memory control, RCDs, buffers, PMICs, and SPD hubs that let DDR5 run fast without errors. Second, link integrity. PCIe Express, retimers that retime and equalize high-speed connections, and CXL memory controllers that expand how servers use memory. Together, these parts raise reliability and throughput in AI and cloud servers, where every gigabyte per second matters. Why it matters for AI? AI servers need rock-solid, high-bandwidth memory channels feeding CPUs and NICs. As DDR5 data rates push and PCI Express reaches Gen 5, Gen 6, these control chips are mandatory to maintain signal integrity and hit bandwidth targets. Revenue grew from 1.82 billion yuan in 2020 to 3.64 billion yuan in 2024, roughly plus 19% 5-year CAGR, with a dip in 2023, followed by a sharp rebound. Net income moved from 1.1 billion yuan in 2020 to 1.41 billion yuan in 2024, about plus 6% 5-year CAGR, after bottoming at 0.45 billion yuan in 2023. The latest print shows H1 25 revenue approximately 2.90 billion RMB, plus 84% year-on-year, and net profit 1.35 billion RMB, plus 133% year-on-year. On valuation, the stock trades around 69x PE on a TTM basis, implying investors are underwriting continued DDR5 penetration and an expanding controller stack, including CXL. Why look now? DDR5 is default in UX86 server platforms. Retimers are proliferating in dense racks, and CXL memory pooling is moving from pilots to early deploys, direct demand drivers for Montage's catalog. Takeover case, not the base case. This is strategic infrastructure silicon with heavy customer qualification. More likely, they compound as an independent domestic champion. Goaland builds direct-to-chip liquid cooling, where coolant flows through metal cold plates that sit on hot chips and CDUs, circulating fluid in a closed loop so heat is carried away more efficiently than air. Compared with air cooling, liquid pulls heat out faster and more quietly, so you can run denser racks. Why it matters for AI? AI servers keep pushing up rack power, and air hits a wall on acoustics, energy use, and reliability. Direct-to-chip cooling shrinks the thermal budget and keeps GPUs at stable temperatures, which means fewer thermal throttles and more uptime. Winning means fitting cleanly into server OEM designs, being rock solid, and delivering the full cooling package: CDUs, manifold, and cold plates. As liquid cooling scales from pilots to fleets, vendors with proven reference designs and validated platforms gain leverage. Revenue was 1.68 million yuan in 2021, 1.9 million in 2022, then dropped to 573 million RMB in 2023 and 691 million in 2024. The 2023 step down was due to a late 2022 deconsolidation. Net profit was 64.5 million yuan in 2021 and 286.7 million in 2022, then minus 31.8 million in 2023 and a small loss in 2024. As orders converted, the company returned to profit in H1 25 with revenue of 418 million, up 48% year-on-year. So investors are paying for growth potential as liquid cooling scales. Why look now? Watch the AI data center mix, named wins, and conversion of backlog into shipments through H2. Margin recovery is the swing factor as liquid scales and bills of materials standardize. M&A odds high. M&A makes sense here. Liquid cooling is a gap for many infrastructure vendors, and buying a qualified specialist can shortcut time to market and unlock account access. Piotech makes the machines that paint chips with ultra-thin, perfectly even layers. Basically, spray painting at the scale of atoms. As AI processors and stacked HBM memory pack in more layers, fabs need more of these coating steps and with tighter accuracy to keep speed high and defects low. Why it matters for AI? HBM and advanced logic both lean hard on layer count and precision. When foundries add AI capacity or move to denser nodes packaging, ALD CVD demand shows up quickly, especially for domestic tool alternatives. Wins hinge on process, results at the customer, and the long range of tool qualification. Once in, tools lead to follow-on chambers, spares, and process upgrades. Revenue rose from 1.7 billion in 2022 to 2.7 billion in 2023 and 4.1 billion in 2024, approximately 55% CAGR. Net profit was 662.6 million yuan in 2023 and 688.2 million yuan in 2024. Basically flat despite a heavier new product mix. Financial year 2024 came in at 4.1 billion RMB revenue, plus 51.7% year-on-year. Earlier, Q3 2024 set a revenue record as ALD PECVD ramped. On valuation, the stock trades around 81x P, suggesting investors expect multi-year share gains for domestic semi-equipment. Why look now? Watch advanced node and packaging tool qualification converting into repeat orders, and gross margin recovery as the mix shifts from first of kind to volume. M&A odds reasonable. ALD plus PECVD slots cleanly into a broader domestic equipment stack, and relatively dispersed ownership can make a negotiated deal simpler than at some peers. Alright, summary on deck, here we go. I hope you enjoyed this slightly different video. If you did, feel free to like, subscribe and share. See you soon in the next one.